So we move to chapter 20, behavioural aspects of budgeting. And this is certainly an area that you're going to see later in your ACCA studies in a variety of different areas. Really, the idea that, the numbers are all well and good. We can number crunch as accountants, management, or otherwise. But let's consider how our budgets, our numbers, our forecasts, etc., and indeed our appraisal of people is affected by the numbers. Let me open up that topic by walking through our introduction here. Let's talk a little bit about motivation. Now, certainly in your own case, motivation is important. What exactly is it? Well, the definition here within the Study Hub says that it involves factors that help make people interested in what they are doing. I agree with that, but I think that motivation has a number of different areas in it, and I'd certainly encourage you to look outside of this particular chapter at a couple of other theories of motivation. One of them is Herzberg's two-factor theory, and the other, you may have heard of it, Maslow's needs hierarchy. Those two theories are quite useful to sort of give you a little bit more depth than perhaps is in the study chapter here in relation to this area of motivation and indeed how we are motivated. So, if we say that it's, yes, factors that sort of get people interested, what else outside that? Well, it's certainly essential for businesses, not just businesses that are concerned with their finance function and their budgetary control, to get motivated employees. Certainly they need players, people involved in their business to be motivated so they can achieve their objectives. Every business is about objectives in some way, shape or form, whether or not it's a profit business or a not-for-profit business. So really, there's our starting point in this area of sort of the impact of budgets really on behavior. Let's move to our second area. This is also important, and I do think that particularly when you're writing out narrative questions, albeit for the fact that this particular exam is based on OT style, using good buzzwords is important. And if there ever was a buzzword in the ACCA qualification, goal congruence is certainly one of them. What do we mean by goal congruence, and how does it tie into budgets and budgetary control? Let's take a look. So really, systems need to drive all employees in the same direction and promote the same desire to achieve the company's goals. In essence, what we're talking about is everyone working towards overall corporate objectives. Now that may sound fairly simple. It may sound fairly easy. Wouldn't that be the case? We pay employees, we pay managers, we pay directors. Shouldn't they all be working towards the company's overall corporate objectives? Well, maybe not. Maybe they're working towards their own objectives. Maybe they're not working too hard at all. At the end of the day, as mentioned up top, businesses exist to achieve objectives. If we haven't got goal congruence, if we aren't driving all employees towards our overall corporate goals, then what are we doing? We don't really have a business that is sustainable, and we certainly don't have a business that's going to achieve its overall corporate objectives, whether that's profit maximization, shareholder wealth maximization, market share, etc., etc. So congruence, and another very sort of similar word is alliance or alignment even. So let's talk about sort of the link between goal congruence, everyone working in the same direction, and indeed strategic alignment. Very, very similar, very little difference between the two. Let's move on from there. So we talked a little bit about motivation, the basics. What about effects of budget on motivation? How do budgets affect people? So some factors to consider. Certainly, budgets are effectively targets, aren't they? This is our budget. This is what we need to work towards. And indeed, I guess linked to that, and indeed probably a good idea. What about if we have incentives or indeed reward schemes that reward performance? In other words, reward employees, managers, directors to achieve these targets. In addition to that, third key area, and this is very important, how employees are involved in the budget setting process. In other words, do we involve lower level? Do we have meetings, let's say monthly, quarterly, periodically, and indeed allow staff to input into these targets? Or do we just impose them from the top down? So this whole sort of conundrum or playoff between bottom up, i.e. let's let lower level, middle level management be involved and maybe even set the budgets, or top down, we're the directors, we're the C-suite, we'll impose the budget. That whole conundrum, that whole sort of playoff is an important theme, not just in this chapter, but elsewhere in your ACCA studies. Get a fix on it, and get a fix on maybe the pros and the cons of each. We'll see a little bit of that later on in this particular mind map. So, what has research shown in this particular area? Well, certainly targets are important. Every business, any business should have targets. We can use targets to motivate employees, absolutely. In addition to that, and this is quite interesting, maybe subjective. In other words, you might agree, you might disagree, I might agree, I might disagree. Higher levels of intended achievement, their actual achievement rises. In other words, broadly speaking, sort of setting budgets maybe outside of the possibility. In other words, pretty difficult to achieve. So a subjective point. Next key point is relevant to that. If they're too easy, and I agree with this, if they're too easy, and it's very, very easy to achieve your target, then individuals are not really that motivated to improve performance. I guess the key is pitching targets and pitching budgets just at the right level. Now that's difficult to do. Let's move on from there. Performance and performance measurement. We said up top that certainly the idea that targets and indeed budgets can help motivate staff. That's really a gimme. I think most people would agree with that. And indeed, Hopwood identified three sort of ways or proposals, as it were, of using budgetary information to assess performance. In other words, to evaluate individuals. Okay. Now, left-hand side, you'll see the sort of headings. It's important that these buzzwords, budget constrained style, profit conscious style, non-accounting, that you memorize these, that you understand without, because there's going to be questions on these in the exam, I would suggest. This is exactly the type of area that the MA examiner would bring in terms of a question. Absolutely. Okay, so budget constrained style as a la Hopwood. So really here, the performance is judged on their ability to meet short-term budget targets. That is the key area. That's the most critical aspect of their overall performance. There's a target, it's short-term, you've got to meet it, okay? I'll let you follow through on the example there yourself. So, next one, profit or profit-conscious style. In this case, employees are judged on the ability to make the department function more effectively. For example, changing a process to make it faster or more efficient. Okay, so really what we're trying to do here is really focus in on profit rather than strictly speaking the budget. Now, as it says there, budget's still important, but they're more as guidelines. Okay. Third area, unusual, non-accounting. Now, I've seen OT questions in this area for sure. Here, really what we're saying is that this target, this budgetary information, is not considered to be important. What we're interested about, clearly companies are interested in how they spend money, they're interested in the targets, but what we're saying there is other factors are more important. In other words, the example here, for example, they say, safety department exceeds its budget, spends extra money on health and safety to meet standard requirements. In other words, really what we're saying is let's look outside the numbers to practicalities. Let's use some common sense. Let's not make adherence to this target, this budget, the be all and end all. Okay? So, according to Hopwood, then, three main approaches. They're pretty straightforward in one sense. One, budget constraint, i.e., meet your budget or else. Profit conscious, this is about efficiency and effectiveness. In other words, really our business being able to do what it does to operate more efficiently, therefore drive profit. And then non-accounting, a little bit more general in the sense that, but in essence what we're saying is that the numbers aren't the be-all and end-all. Those targets aren't the be-all and end-all. For example, there are other factors that may be more important or maybe as important, non-financial areas. Okay? So let's move from there to this second part. I've split this mind map into two because of its size. So let's look up at the first branch. Now, we've talked about targets. Let's talk about sort of schemes. Okay, let's just say, we have budgets, so we want to incentivize people. We want to motivate people. How do we do it? Well, certainly, as we're aware, financial motivation is something that we would have to consider. Incentive schemes, rewards in some way. You've met your budget as a department. Here's your financial reward. Outside of that, the flip side, I guess, non-financial. Now, this is an interesting point, and I'll take you back to the opening of this particular mind map when I mentioned those two motivational theories. You'll recall Herzberg's two-factor theory and indeed Maslow's needs hierarchy. Now, what both of those theories, broadly speaking, would suggest is that actually money, or indeed financial motivation, is not where it's at. In other words, just because you pay a high salary, just because you provide a bonus, doesn't necessarily mean that all of your employees are going to be super motivated. What those theories suggest is that actually non-financial factors, for example, recognition, achievement, awards, social proof, etc., these things are actually the things that tend to motivate people more. I mean, think about you. Think about yourself. What motivates you? Is it just simply an increase in salary? Maybe it other things. So in this area here, it's, subjective, really. It depends on your viewpoint. But certainly the two factors, i.e. financial motivation and indeed non-financial motivation, they're both going to be in play in some way, shape or form. And it may well be at the end of the day that it differs from person to person. Okay? Let's move on to the next area. So when we think about sort of budgetary control, really what we're talking about is, okay, we set a budget for the next quarter. How do we evaluate managers? Let's say we have a responsibility center. Well, certainly they need to be in some way, shape or form judged on their results. Okay? Now, that sounds simple, but it's perhaps not as simple as we might think, because, the whole area of responsibility or indeed controllability comes into play. Really, you can only evaluate center managers based on what they control. And again, this is a very, very common theme in your ACCA qualification. The whole idea of, okay, well, we're trying to evaluate people. How do we do it? Well, this is not in their control, or that's not in my control. You can't evaluate my performance for the last quarter based on things that are not in my control. For example, an allocation of fixed costs from head office. So outside of that, the general rule of thumb or theme within this chapter is that financial incentives broadly speaking, will encourage people to make their targets, a greater chance to achieve their targets. Again, it may depend upon the individual. Now, what about incentive schemes generally, whether or not they're purely financial based or indeed non-financial? What are the qualities? Okay, you may have experience of this yourself. You may have worked for an employer who had an excellent scheme. You may be incentivized as a result of that scheme to work harder. Maybe it was the reverse. But these 4 areas on the left-hand side, fair, motivate, clear, easily measured, certainly for me, that's very much common sense. Let's look at the first one, fair. Well, certainly fairness is key. Give employees a fair reward or bonus that recognize their efforts to achieve the organization's game. If it's unfair, you're going to get the reverse of motivation, demotivation, for sure. Second point, motivate. Well, clearly, this is what we're talking about. Motivation should mean goal congruence. It should mean people work harder. If you can see improvements in performance, if you can see people being incentivized, then you're motivating. Individual managers, directors, the C-suite, they can tell whether or not staff are motivated, for sure. Third key point, clear, or indeed clarity. The scheme can't be overly complicated. It needs to be clear to the employee what they need to do to achieve their target and therefore to achieve their reward. Okay? Last point, easily measured. Again, it sort of links into clarity or clear part 3. It should be fairly straightforward for the employee or indeed the employer to measure the scheme in operation. So there's no misunderstanding over what each staff member receives when they reach targets, okay? Nothing worse, perhaps, than an employee thinking that they have reached a target or thinking that they're going to be eligible for this bonus or this incentive, etc., and then finding out that they're not. So again, let's remember, fair, motivate, clear, and easily measured. Now, in terms of types of schemes, we've talked about the need for them. We've talked about what they should do. Types of schemes, several on play, several options. The first one, profit sharing scheme. Again, does what it says on the tin. A percentage of the organization's profit based on their met targets. Simple as that. Perhaps a very common one, certainly for the C-suite directors, share options. So offering incentives in the form of shares, particularly listed companies, public companies. And note that the way that these share option schemes work is that, in effect, the option is granted, let's say, day one, and it can be exercised down the line by the individual, let's say, for argument's sake, 3 years. But they will be in a position to fix the price of the shares on day one. And on the basis that obviously shares tend to rise over time, if they're fixing the price at a discounted level, then what the employee knows really from day one is, if I stick with this company, if I work hard, if I work towards achieving the overall corporate objectives, then in 3 years' time, I'm going to get something for nothing. I'm going to pay, $2.50 for a share that may be worth $4 because the price is being fixed now. So these share option schemes are very, very common and a very, very good way to employ staff and indeed to motivate staff. In fact, I saw a news story that you may have seen recently about Elon Musk, who actually has a 0 salary, has never ever taken a salary from Tesla. Or indeed any of his companies. Why? Because he is paid entirely in share option schemes. Why? Because they're tax efficient. So outside of the pragmatic sort of mechanism, they generally, in most tax jurisdictions, share option schemes are very, very tax efficient. In other words, tax jurisdictions give tax breaks. They give tax allowances for individuals, directors, employees, etc., being rewarded in share option schemes. It just happens that Elon Musk, I think his share option schemes of what they wanted to devote to him was $56 billion. So good luck to him. A great guy, smart guy. Oh, okay, so that's share option number 2. Individual bonus schemes. Now, when we talk about bonuses, broadly speaking, I take this to mean really additional salary. I'm saying that the individual is on $100,000 a year basic salary, and on the basis that this individual meets their targets in the next quarter, 6 months, annually, whatever, then there's going to be a $25,000 bonus. Note, this is individuals. So this individual is being assessed on his or her own performance. Okay? Contrast that with the second area of bonus schemes, i.e. group. And same thing, but what we're talking about is department or team. Now, obviously, in terms of the pros and cons or the ways and wherefores between the two, slightly different implications there. I mean, you know yourself. If you worked in a department or a team, maybe there's been a bonus scheme, maybe there hasn't. But, at the end of the day, some people work harder than other people. So this could lead to maybe some argy-bargy, maybe some disagreement, etc. But at the end of the day, it is an option for employers to use this type of group scheme. Okay? Now, in terms of approaches to budgeting, several approaches that I mentioned at the outset earlier on. So first one, and this area is important. This is one of the most important areas within this chapter, this idea of the behavioral aspects of budgeting. So imposed, top down. So budgets set by senior managers and imposed, that's a bit of a nasty word though, isn't it? On employees without any involvement of the budget holders, such as junior managers. Now, you can imagine yourself, and I will go through advantages and disadvantages in a moment, but you can imagine as a junior manager, you can say, that's your budget, that's it for the next quarter, you better make sure it happens. Okay, so you can imagine the sort of impact upon that. I'm not saying don't use it or, you shouldn't impose budgets. I'm just saying from a behavioral or indeed motivational perspective, you can see how maybe some managers, would prefer perhaps a different approach. But at the end of the day, as we'll see down below in terms of advantages, disadvantages, certainly it's quick, it's easier, and perhaps you might argue that senior managers have got more information. They're experts, their expertise, more experience, etc. Maybe they should be imposing budgets. What about the flip side then? As you guessed, participative, i.e. bottom up. So really what we're saying there is involvement. This approach to budgeting, budget holders, for example, junior managers, are involved in the process. Now, pros and cons of that, as we'll see in a moment. I mean, they're closer to the action. I think probably this will motivate them more. Imagine yourself in this situation. You get involved, you get to sit with, let's say, your line manager, maybe the CFO, and talk about the budget within your given department for the next quarter. Of course, I would have thought that would be motivating in some way, shape, or form. Okay? Now, in terms of key points here, let me just get the mind map in the right part. I just want to deal with this before we talk about advantages and disadvantages. Now, what we're not saying, as I sort of alluded to, is, oh, well, if you're using top-down budgeting, you're crazy, yeah? That you shouldn't do that, demotivating, etc., etc. There are situations where it's relevant. So, for example, first one, small organizations where departments are closely involved with other departments. Top-down is going to be easier because think about it, there won't be sort of various levels in the hierarchy. It may well be that the directors sit just above all other employees, possibly 2 levels. New organizations, I mean, in the sense there, I guess what we're talking about is, well, with new organizations, maybe they need to work fairly quickly. Maybe they're just trying to find their way. So, they can always switch to bottom up in due course. When the economy is struggling, certainly, we need to pull our horns in and be tight if we have some form of, let's say, recession. Yeah, we need to work quickly, and really we need to rely, I guess, on the people with expertise. Where an economy is struggling, things may change quickly, and we may need to act quickly. So perhaps a top-down approach in that situation is better. Last point, where non-finance staff do not have the training to produce budgets. Yes, we may well have inexperienced or staff with a non-financial background. So the idea that you would sit them down in a room, get them to participate in their budget for the next quarter, maybe that doesn't make a tremendous amount of sense. What about right-hand side, where we're talking about bottom-up? Remember, we're going from junior managers, we're involving them, bringing them into the room, saying, listen, what's your thoughts? Let's get the budget organized for the next quarter. Certainly large organizations where departments are independent. Think about it, a lot of hierarchy there, the sort of depth, or indeed the distance, let's say, between, directors, let's say CEO, FD, etc., and lower levels is quite large. So it may well be that, involving people that are at the coalface, on the front line at lower levels or even middle level is perhaps a better way to approach it. Again, for the same reasons, well-established organizations, because, well-established organizations, we would read into that, I guess, broadly speaking, successful organizations, organizations that are established, that they know where they're going. So really, it may well be that they have a lot of staff at different levels, lower level included, middle level, that know what they're doing. They've been in the business for a while. Let's involve them. When the economy is booming, less pressure. Less pressure. When the economy is booming, broadly speaking, I can think you would probably say that really things are a little bit more stable. We know what's going to happen next month, more often than not, or next quarter, etc. Last point, I guess, flip side of the one that we made for top-down budgeting, non-finance staff having suitable training. In other words, having some form of expertise, perhaps past experience, either in our company or maybe in another company in this area. Let's get them to help us, for sure. Okay, let's move on to the advantages and disadvantages that I spoke of. Now, what you'll see here is only reference to bottom-up budgeting, but obviously note that in one sense, certainly with some of the advantages, i.e. in the cut and paste that I've included here, you could sort of flip it on its head and turn them into a sort of a disadvantage for, I guess, top-down in one sense, some of them certainly. Let's just take a quick look. So we're talking about bottom-up advantages, motivating. Absolutely, I think, and you'll probably agree, that using a bottom-up approach, subject to the vagaries and the criteria that we saw up top, in other words, the right situation, the right company, etc., absolutely motivating. Second point, achievable. Yeah, more than likely, if you involve people in the process, it's more than likely, I would suggest, that they would work harder towards achieving those targets, achieving those budgets. Next point combines experiences. Certainly, both sides of the coin, both senior managers and indeed junior managers, have some experience. What you're doing is you're combining that experience and indeed expertise. Next one, realistic. Absolutely, I agree with that. You're talking about people that are close to the action. It's much more likely if you involve people that on a day-to-day, week-to-week basis are, involved in this particular area, whatever it is, sales, marketing, whatever. It's more likely it's going to be realistic. The penultimate point, coordinates employee and organizational goals. Yes, I agree. Again, I think it depends on the individual, but what you're referring to there is congruence. As we saw on the right-hand side of this mind map, you're really saying that if you involve people, it's more likely that you'll be able to align or get sort of departments, individuals, employees to sort of appreciate congruence. And that congruence may well, flow into that budget setting process, Last point, it certainly links into the penultimate point. It considers employees' goals. Absolutely, because you've got their pitch, you've got their say-so, you've got them proffering their opinion in relation to different areas of the budget. And it stands to reason, if they're sitting there in the room, that their goals in some way, shape or form are going to come out. So that's the advantages. Now, in terms of the disadvantage, you'll see within the study hub that there isn't really much in terms of disadvantage. The only one that they've sort of pinpointed within the study hub is budgetary slack. What do we mean by that? Well, we really mean that, well, hold on a minute, sounds great. Bring these employees, these junior managers, middle managers, etc., bring them in, let's involve them. But what if they include, some buffers? What if they build in what you would call slack or a little bit of padding? Maybe they don't mention it. That could be a problem, because in one sense what you've got there is people suiting themselves. In other words, rather than them thinking about, right, what is the correct budget, we need to focus on overall corporate goals, overall corporate objectives. They're thinking, well, I need to make sure I can make this budget. So that's what's called dysfunction. Okay? Now, that's inevitable, because we're dealing with human nature, we're dealing with people, and as we know, sometimes people act in their own best interest. So outside of budgetary slack, certainly in terms of bottom up, I'd also suggest, although it's not mentioned within the study hub, involving managers is going to take more time and cost, and we know time is money. If we have to sit with junior managers as opposed to, let's say, the senior managers deciding and imposing the budget, then time and cost is going to increase, and we need to make sure, obviously, that the cost-benefit equation is considered. If we're spending hours or days or weeks toing and froing about budgets because we've involved junior managers, and at the end of the day it doesn't improve performance, then we have a problem. Okay? So that's advantages and disadvantages. We're sort of concluding now. Good little chapter. No sort of really high level sort of technical areas at all. And again, this area of behavior and behavior within finance, within accounting, dysfunction, motivation, etc., you're going to see throughout your ACCA studies. I think it's a fairly straightforward area, and I think that we should be murdering questions on this chapter, absolutely murdering them, okay? I don't think we've got too much excuse to be getting questions on this chapter wrong. This is some cheap, easy marks. I hope you agree. Let's keep pushing, stay busy. Thanks for sticking with me, and indeed for listening. Good luck with your studies. Thank you.